Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Looking at the comment section, one of the comments about uranium is talk about OTC investment. So that's over-the-counter investments. So you've got a couple of ways that companies list their stock. They can go to OTC, which is like the pink sheets type deal, or you can go NASDAQ or New York Stock Exchange. A lot of companies that don't have a lot of money, they're very small companies. We'll call it capital constrained. They want to dump their money into production or into assets versus into listing on a large exchange. Going on a large exchange costs a lot of money. So usually the progression of a company, they start on the OTC or pink sheets. They're there for quite a long time. They can develop assets, become a much larger company, and when they have enough cash flow and they determine that it's time to raise enough capital for the company to go even bigger, they'll invest. It's basically investing money to list on the New York Stock Exchange or American Stock Exchange or NASDAQ or wherever they're fit. So a lot of them are going to stay in the OTC. So this question is, most stocks are OTC, over the counter, and fund managers are restricted in investment in OTC stock. Are you able to speak more about the pros and cons about investing in OTC? So what's the pros and cons of investing in over-the-counter stocks? Now, most of the companies that I'm invested in are over-the-counter stocks, OTC, or they're on the TSX. There's ways around for fund managers to buy into this sector without buying directly into OTC. So what I did is I looked at some of the ETFs, the exchange traded funds. And here are some, let me zoom in here, some of the holdings for the exchange traded fund of North Shore Global Uranium Mining. If those OTC stocks are in the ETF, more than likely people can indirectly buy these through the ETFs. So they're going to put money and buy the ETFs, which then the ETF goes and buys these OTC stocks. And as you can see, Bannerman Resources is an OTC stock, and Uranium, North Shore Global Uranium Mining ETF owns it. There's Boss Energy, Deep Yellow, Lotus Resources, Paladin Energy, Peninsula Energy, Toro Energy. This is from November 30th, 2020 is the last one they had, I think. Azarga, Camco, Denison Mines, Encore Energy, Fission Uranium, Global Atomic, Goviax, ISO Energy, Laramide, Next Gen Energy, UEX, Uranium Participation, CGN Mining, Kazatomprom, Yellowcake, UR Energy, Uranium Energy, and Energy Fuels. And this is 99.9% or 99.8% of the stock that they own. In URA, I pulled that one up as well, just to give you guys a peek into what these funds are buying. Zoom in here. So this is Camco, is their number one holding. This is the market value that they hold, $185 million worth of shares. Priced at $21.61. This is 9/3/2021. It was just updated. So Camco, Next Gen Energy, Kazatomprom, Paladin Energy, Denison Mines, Energy Fuels, Global Atomic, CGN, Sumitomo, I don't know how to say that, Idochu, GS Engineering, Daewoo, Rio Tinto, Samsung, BHP Group, Siboney Stillwater, Mitsubishi Heavy, there's Fission Uranium there, Centrus Energy, Boss Energy, UR Energy, Encore Energy, Uranium Royalty Corporation, Deep Yellow, Bannerman, UEX, ISO Energy, CGN, Peninsula, Lotus, Goviax, Vimy, Greenland Minerals, Western Uranium, Azarga, Forcis Metals, hey, getting Forcis in there, Laramide, and that's that. So as you can see, looking at the two ETFs, there's a lot of these OTCs in the ETFs. So I think if the money flows into the sector, just in general, I think the money's going to obviously flow into all of these companies. Some of the companies are so small in market cap that any sort of flow towards them is going to blow them up. Now, another thing that you could look at, and I know you guys are talking about OTC, when uranium goes up, is the company that you're interested, if it's an OTC stock, over the shelf or over the counter stock, is it following and tracking the overall general trend? If the answer is yes, then I don't think it really matters, because money is flowing into this. Now, retail, and this is what I do. This is a trick that I do. It's not really a trick, but you've got leaders and you have laggards. And when the leaders take off, I say, ooh, the leaders are taking off, I'm going to buy the laggards. And what people are going to do is they're going to search for uranium companies that are lagging in relationship to the leaders. And then they'll just pile money into it. So what I think is going to happen, if the momentum, and it seems like the momentum in uranium is going to continue higher. So if the momentum in the uranium price, the price itself, continues higher, I have a feeling that you're going to see the entire uranium listings all go up. And if you have leaders, if they're starting to rocket higher, people are going to start piling into the laggards just like I do. And they're going to push those prices up. So overall, I don't think it matters if they're OTC or New York Stock Exchange or anything. And in fact, I think what matters the most is market cap. Market cap's the size of the entire company. It's very hard to raise a market cap from 1 billion to 2 billion. That's a lot harder than 10 million to 20 million. And all of your large, like all of the biggest returns, most likely are going to be in the smaller cap companies going into a medium cap size company. So it could be an explorer at a 10 or 20 million market cap. They find something that is substantial, and maybe they become a billion market cap. Going from 10 million to a billion is a massive move, because that's 100x. So that's possible, and they're out there. Or a 20 million to a 100 billion, which could be a 50x, something on the lines of that. So your returns are the multiple of your market cap. Your market cap is your shares outstanding times your share price. That's the total valuation of the company. A small company can grow into a mid-sized company pretty easily. A mid-sized company growing to a really big company is much more difficult. And some of the companies, if you research through history and time, it's easy to kind of get to a 200 million plus market cap. Sometimes when you hit certain areas, it's like you almost have to manage the company completely different than you were a small company. So going from a small company to a mid company and a mid company to a large company, it's not, you may need different management, you may need different structures. It becomes a lot more cumbersome. So it's easier to, I think, to get a small company, grow it to a mid cap, and then kind of call it quits. And those are a lot of the companies that I'm going after, are those smaller type companies or smaller mid cap growing into a larger mid cap. So we'll see what happens here. This is going to be a really interesting time because, I've got some people, they were asking, do I think some of these companies are going to come back? In all honesty, I don't really know. No one's going to know this. No one's going to say, yes, they're going to come back and pull back. Because that's a dangerous thing to say to somebody if we're in a market where the uranium price is literally starting to launch. It's going to go vertical probably. And it already kind of has. We're seeing some massive updates in the uranium price. So more than likely, the mining stocks in uranium are going to follow suit. And there's going to be sideways movements and some pullbacks along the way. No doubt about that. But when I'm looking at the uranium price, I'm not going to be selling anything. I'm looking to maybe even add. It's difficult to say. I mean, I've got a pretty good position and an allocation to it, but if I have a little bit of money on the side that, I make, do I add into it? I don't really have the good answer for you guys. It's when the ratios are incredibly cheap and everything is just sitting there, it's super easy to buy this stuff. For me, it's like, oh, it's cheap. It's down there. Let's just continue to pile in. And that's what I've done. I've done it right in front of everyone's face. I'm like, I'm buying Uranium Royalty Corporation. I'm buying this. I'm cost averaging in. And I'm telling you guys what I'm doing. Now, when things start to move and the interest starts to peak, people are saying, what do we do? Is it going to come back down? It's like, I don't know if this is going to come back down, guys. I don't know. Because you're going to get people. This is going to spark interest in a greater circle than what you guys are on this YouTube channel and on Twitter. We have a community where we all know each other kind of to some extent. We are uranium bulls. And when this little community, people are going to start seeing this and they're going to say, I want in. And then the money's just going to start, the momentum's going to carry us it's going to carry us forward and get larger and larger and larger. More than likely, this isn't going to be a smooth, nice pace with little pullbacks going up. I kind of see this as a big surge, potentially, because people are going to figure this out. The momentum people are going to come, and they're all going to pile in all at the same time, and we're going to get a big bubble. It's like the pre-bubble before the actual move happens in the production and mining and the actual real stuff. So I think we're going to have like this pre-bubble where everybody piles in when they see the uranium price. And maybe the uranium price will get stuck in some spots. Maybe we screwed up to 40. Maybe we break it or not. I don't really know. We do have idled capacity in uranium out there. So maybe it'll slow it down if we get some production on. But the problem is this stuff isn't fast moving. It's slow. So if you get a bunch of money that comes in and everybody just piles into it, there's no way to react to it. And that's what's awesome about a lot of the investments I'm in, is there's no way you can react. It's you're either in or you're out. And I've said that before. So what I do is I'm in and I hold on. There's no way there's no way that I think that we're going to probably go back down to $20-something a pound. I just don't. I don't think that's going to happen. Is it possible? It's possible, but I just don't think it's plausible. I think we're gonna march higher here, and we could go into a vertical type movement, which we're starting. And I'm holding on. I'm not going to sell anything. It would have to get way up there for me to start thinking about selling. At what price? It'd have to get above at least 80 for me to even think about anything. And it depends how it gets there. If it's a nice steady move, I'm going to keep holding. If it's a spike like no other, then you have to look at things and start maybe putting things into free rides, because it's probably going to come back down. But history has shown us, when you look at how the moves in uranium go, that they don't come back down. So it's a funky scenario, and we'll have to see and monitor what's going on around us. Is energy going through the roof too? Are all the other commodities starting to move on up? Is inflation high? Are interest rates going up? Is money starting to rotate? All that stuff matters. And honestly, guys, I don't have all the answers. I just know it's cheap. It's time to hold. And we can ride this together. Subscribe to the channel. We're going to try our best. Doesn't mean we're going to be right. Doesn't mean I'm going to make every single right call. I can tell you what I'm doing, and you know what? There's probably going to be some things I do wrong. I haven't lived through too many of these, and I'm sure a lot of you haven't either. If you're 60, 70 years old, you might have gone through 3 bull markets, maybe. The 70s, the 2000s, and today, and that's it. That's all you've experienced. And I saw the tail end of the last bull market. And that's all I've looked at. So hopefully we can ride this together and we can get the majority of that value for us in our investments. My approach is buy it, hold it, don't sell. And if we want to go crazy, what you do is you get your positions in your mining companies, and then we just all pile into the Sprott fund with extra money. I'll put $1,000 in there, put another $1,000 in there, and then all of a sudden you have a low risk spot, physical holdings, and that is subject to the spot price, and you're driving this. I like to almost say this: the Sprott price higher. So that is another method that we could do. Is we get positioned in our mining companies, hold on, and just pile into the Sprott fund, which is going to drive the price higher. So now, here's the thing: if they don't, it's going to take time to bring on idled capacity. I don't know what's going to happen if everyone starts piling into the Sprott fund and they continue to buy it. And let's say they hit kind of the bottom of the barrel. What does that do to price? I don't know. If they don't have anything to sell, is it just going to drive the price all the way to the moon? I don't know. I don't know what happens then. We'll see. We'll see what happens. I'd rather be in the companies than out of them. That's my opinion. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.